After having recently covered some of the worst performing watches since the market downturn a couple of years ago, we now return with a secondary analysis of the best and worst performing watches by brand. And we're going to cover the usual suspects and several more brands. So keep watching. All the data in this video comes from WatchCharts.com, the world's most powerful watch market research platform. Visit our website to understand high-level watch market trends, get up-to-date pricing on over 24,000 watches, and track the value of your collection. Also, if you're interested in buying and selling among fellow collectors, then we invite you to visit the WatchCharts marketplace at marketplace.watchcharts.com. We'll begin the list with Rolex, and what we're going to do is talk about performance at a collection level and then do the best and worst performing collection for each of the brands. And so within Rolex, because so much of the secondary market focus is on sports watches that were hyped and then saw a lot of that hype sort of come down, the brand that actually has performed best out of all of the collections that Rolex produces is the Cellini collection. That has lost 7.3% of its value across all of the references in our Cellini index over the last 2 years. And that sort of is spread across multiple references. So the most heavily weighted reference in that index is the reference 50535, the moon phase, where the moon is a meteorite disk. This has lost over 5% of its market value over the last couple of years, but obviously because it's so heavily weighted, that weighs the index down. But then even the 50525, which sits at a lower price point and has less weight in the index. Again, these weights are based on transaction value, has dropped over 8.5% in the last couple of years. Whereas the blue dial version, the 50519, which is the third most heavily weighted watch in the index, is up very, very slightly, just 2.8%. So even though the Cellini collection as a whole has lost over 7% of its value over the last 2 years, it is still the best performing collection out of all of the collections for Rolex. And the reason is because there are so many hype watches that have done much, much worse. So the Cosmograph Daytona collection, again, this is based on the Daytona Index, which is a collection of the 30 most popular Daytona references, has lost over 25% over the last couple of years, and that trend has been sort of near continuous in that time. The most heavily weighted watch in that index, with 16.1% of the weight by transaction value, is the previous generation 116500 that has lost almost 28% of its value over the last 2 years. And remember, when we go back 2 years, we're going back to summer of 2022. So if you were to actually look at how much prices have dropped since the market peak, that's well over 30%. But just going purely off of 2 years of analysis, it's almost 28%. The 116508, shown here with the John Mayer configuration, which is with the green dial, but across all dial variants, has dropped nearly 32% and has about 10% of index weight. And then the 116520, which is the generation of the Daytona before the 116500, still with a steel bezel, has also dropped just over 30% over the last couple of years, and its index weight is quite comparable to the precious metal 116508. In fact, if you are interested in steel Daytonas, more specifically, we also recently did a video on that, so I would encourage you to go check that out if you want to see what the most value for money pick within that subset of Daytonas looks like. And if we then compare the market performance for the Cellini and Daytona indexes against the Rolex index, which is the 30 most popular watches in the Rolex sort of bucket, and so that includes some Daytona references, but of course, references from all of the other collections by Rolex as well. The Rolex line, which is the blue line on this chart, you'll see is down just under 24% over the last couple of years. The Daytona index has done even worse. So that's down almost 27%, whereas the Cellini is only down 7.3%. Therefore, and then every other collection is sort of going to slot in on this chart if we were to plot it between the yellow line and the green line. Moving on to Patek Philippe, which is on the secondary market by transaction value, the second largest brand behind Rolex. The best performing collection has been the Grand Complications collection. This is where they do minute repeaters and chronographs and perpetual calendars and that sort of thing. And so here you saw over the last 2 years sort of a general rise in prices, and then that rise has come back down. But still, over the last 2 years, it's up 2.2%. The most heavily weighted watch in this collection is the 5270p perpetual calendar chronograph, which over the last 2 years is very slightly up. The reference 5320G, which is just a perpetual calendar, has actually lost over 10% of its value and also comes in at just under 9% of index weight, is then followed by the 5204R, which is another perpetual calendar chronograph, which is also more or less sort of flat over the last 2 years. But of course, the Grand Complications Index includes more watches than just these three. These are just the three most heavily weighted watches. So definitely, if you're interested in seeing the full list, go check out the Grand Complications Index on our website. But the worst performing collection, again, following the pattern of the Daytona, should come as no surprise that it is the Nautilus, which is down nearly 34% over the last 2 years and has also seen near continuous decline over that time period. The 5711A, which is the most heavily weighted watch, at 17.3%, has lost nearly 2/5 of its value. It's no longer a six-digit watch on the secondary market. And the 5712A/1A has also lost over a third of its value to also no longer be a three-digit watch in terms of market price. And this one, in terms of index weight, sits at about 9.5%. And then lastly, the travel time chronograph Nautilus 5980/1R, which is rose gold case on a rose gold bracelet, has actually lost just over 40% of its market value. And again, if we were to plot all three at the same time, you'll see that because the secondary market performance of Patek as a whole is impacted so much by the Nautilus family, which makes up a big chunk of the secondary market transactional value for the brand, those two index lines, so Patek, which is in blue, and then the Nautilus collection, which is in green, track very, very closely together, whereas the Grand Complications collection in particular has an entirely different sort of trend over the last 2 years. The third largest brand on the secondary market, the next one we're going to look at, is Audemars Piguet, which of course is most famous for its Royal Oak collection. But as you probably can already guess, we'll get to that in just a second. Before that, though, we're going to talk about the best performing collection, which is the Millenary, which is also slightly up over the last couple of years, not as much as the Grand Complications collection for Patek Philippe, but still within Audemars Piguet, the best performing collection on the secondary market. This has, a handful of references which all sit between the $10,000 to $25,000 price point. But this is another index where there's very few references that trade on the secondary market. And so each individual reference tends to make up a far greater share of the index weight. However, even here, you'll see that one of them is up 1.5%, but is very, very heavily weighted, whereas the other two references haven't done quite as well. In fact, have lost value over the last couple of years. But across all references in the index, obviously, when we aggregate that and weight it by transaction value, the overall index ends up coming out ahead over 2 years by 0.8%. And then, of course, the worst performing collection is the Royal Oak, much like the Daytona and the Nautilus, down, in this case, 32.9% over the last 2 years, and a near continuous decline as well, dropping from an index value in the 6 figures to an index value now in 5 figures. The 15500 ST is the most popular reference by transaction value, so it's about 9% of the index, and has lost over a third of its value over the last couple of years. The stainless steel chronograph has also lost nearly 2/5 of its value and has an index weight of just above 8%, the reference 26331 ST. And then lastly, the reference 15400 ST has lost even more than the 15500 ST, and also makes up a considerable chunk of the index, but not as much as the first two watches. And very similar to the Patek trend lines, what we see here is that the Millenary sort of follows a very similar sort of gentle rise and then gentle decline over the last couple of years, but still comes out slightly ahead, whereas the AP market index in blue and then the Royal Oak market index in green track very, very close together, because so much of AP's market index is weighted towards Royal Oak references. And of course, the Royal Oak index is all Royal Oaks. And so they also end up performing very similarly. The next brand we're going to look at is actually one that has done not too badly in the primary market, and even on the secondary market, actually, as we'll see in a second, as some other brands, certainly even in its price segment. But the best performing collection within Cartier is the Tank, which is up 8.2% over the last couple of years. The most popular reference is actually this Tank Française. The second most popular is this same watch again, but in yellow gold. And then the third one is actually the two-tone reference. And each of these is up double digits over the last 2 years. And of course, performance here tends to be sort of a little bit skewed because of the overwhelming weight of just the first reference by itself, which is 13.2%. The second most heavily weighted watch is less than 6%, which is less than half as much as the second watch. So of course, if you were to go to the website and look at all of the rest of the watches on the index, you'll see, as you make your way down the list and look at other types of tanks, maybe because you're expecting to see, let's say, the Tank Louis Cartier, but it's not featured on this list. It is on the index, but it's just not weighted as heavily as these ones are. You'll see similar sort of story play out across multiple references there. And then the worst performer is actually quite an interesting one. And I think it also sort of relates to the same sort of trend we've seen for Rolex, Patek, and AP so far, which is that the Santos is down 9% over the last couple of years. And if there is something that fits into the same sort of hype watch / stainless steel integrated bracelet sports watch category for Cartier, it would be this watch. And so the most heavily weighted reference here, just for a market price of $6,200, is the blue dial Santos in the large size with an automatic movement. This has lost nearly 8% over the last couple of years. The white dial version of the same watch is down 5.8% over the last couple of years. And then the skeleton version, which is over $20,000 in terms of market price, has lost 14.4% of its market value. And then if we compare all three, the Tank index is up considerably. The Cartier index as a whole over the last 2 years is down just 1.8%. And so that's certainly different from the other brand trends that we've seen so far. It hasn't done as badly as the brand overall seems to get impacted by its sports watch sort of secondary market activity, as we saw for the other brands. But here, the Santos in green, the Santos index in green in particular, it's very obvious, sits at a much lower performance level than the other two index lines. The last one we'll look at in this video is Omega, where the best performing collection has been the Aquaterra, which is up very slightly, 2.8% over the last couple of years. The most heavily weighted watch here is the World Timer, which actually has not performed as well as some of the other watches in the collection. In fact, even the second one, which is the green dial Aquaterra, has not appreciated in value, whereas the black dial version certainly has. I think this also reflects some of the more sort of perhaps seasonal trends for what is desirable and what is not. And so even though the two Aquaterras that don't feature the World Time complication have comparable weights, one has done much better than the other over the last 2 years. And of course, if you go to the website and look at the full list of Aquaterra references that constitute the Aquaterra collection index, there will be several other watches that have appreciated enough that when looked at in the aggregate over the last 2 years, the index as a whole is up 2.8%. The worst performing collection, however, is the Railmaster, which is down 6.6%. The set of references is there's a spread of market performance. So the 1957 trilogy Railmaster, for example, is not down too much, but the other ones have both depreciated. Their market prices are now less than half of their last known retail prices. And just in the last 2 years alone, they've lost 10% and nearly 24% of their values respectively. In terms of what the product itself is, these are as solid as any of the other watches that Omega makes. They have coaxial master chronometer certified movements. They come on bracelets. They have very attractive case designs with the turned lyre lugs. They have nice dials with lume applications. And so it's purely, I think, a reflection of how stylistically tastes sort of get reflected in secondary market activity that we can identify as the cause for why the market performance of these watches has done as poorly as it obviously has. When we compare the Omega index with the Aquaterra and the Railmaster indexes as a whole, we'll see that Omega over the last 2 years is down 5.2%, which tracks sort of a little bit with the Railmaster index, but the Aquaterra certainly has been an entirely different story, certainly starting from a little over a year ago when the trends started to diverge and have stayed diverged since then. If we were to then look at all of the collections in one go and then see purely in relative terms, so these are not obviously absolute values, because in the case of grand complications, for example, from Patek Philippe, we're looking at watches that sell for high six figures. But if we're looking at watches from the Tank collection, they sell for maybe not even $10,000. These are obviously ranked in relative performance terms. And so the best performing collection of all of the ones we've looked at over the last couple of years has been the Tank, followed by the Aquaterra collection from Omega, and then so on. And then Rolex certainly rounds out that list. But if we were to rank by worst performing collection, then it should be no surprise that the Nautilus, followed by the Royal Oak, followed by the Daytona, are the three worst performing collections by a mile, certainly for these five brands. And that sort of generally tracks with our understanding of how things have developed in the secondary market as a whole, where the biggest hype watches that saw the largest increases in market value have subsequently seen some of the biggest falls. These are obviously just some of the brands that we could have talked about. There's a whole list of additional brands that we have indexes for that we invite you to go check out on the website. But hopefully this gives you some greater insight at a deeper level into where some of the best and worst performing watches on the secondary market over the last couple of years have come from. We hope you found this interesting. Thanks for watching.